Right, and we are live with the end of day pulse wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger reports. I'm not going to keep you long. I just wanted to show you a few things. You know, many people have been talking about what occurred in the markets today, but I don't think they truly can appreciate the repeatable patterns that took place today. See, there's a secret on Wall Street, and I'm going to reveal that secret to you. No one else is talking about, but we're going to talk about it here this evening. It's going to be a quick video, show you a couple of charts, and you'll be able to see for yourself exactly what's going on. Now, keep in mind that I did warn last year. I warned that the first quarter of 2022 was going to be to the downside. I told you to expect a significant pullback in the price in the first quarter, and that's exactly what you have been seeing. You've seen the stock market and Bitcoin shock you, shock the world. I told you it was going to come without warning. There would be no news behind it. It would just happen organically because that's how things happen in the markets. Case in point, look at this gold futures chart we have in front of us. As you can see here on this particular chart, okay, the market has been in a rebound ever since December the 3rd of 2021. The market has been taken control of by the bulls. You've had this really nice correction, right? Off of the bear market low. Bear market low. We were in a bear market when this low occurred. And now, here you are. Okay? Market is trying to redefine itself, trying to get an overall bull market going on the daily chart. Market's very bullish. You're above the trend line support on the algo chart. You're above the Kumo cloud. Life couldn't be better. Flip it over to the weekly chart, and the truth comes out. You're still in a bear market. Nothing has really changed, and you're still consolidated. The price action is still consolidated into the week of June the 18th of 2021, the consolidation bar. The market has pretty much been lockstep in that zone and has not truly broken out as of yet, even though it is trying, as you can see here. Last several weeks, market has had an upward trajectory bouncing off of the technical support lows. But we do have this massive bearish pointer from August, the week of August the 13th of 2021. And I believe that that price is going to be tested and or taken out. Before you can get bullish, you got to take care of your bearish pointers. As we switch over to silver, you'll notice on the silver chart, this is a daily chart, and we have a rally alert buy signal going into tomorrow's trading. Now, this is a technical bounce off of the longer term downtrend channel that we have established, all right, just a few trading sessions ago. So the market's going to try to put in a little short-term bottom here and get a little bounce going. You can see here from the last rally alert buy signal, the market's been pretty much straight up. Then it tapped out and it started to come back down again. So this is what we are looking to see if the market's going to try to maintain a more bullish stance going forward on the daily chart. As you flip it over to the weekly chart, looks just like the gold chart, right? But even more bearish. You're below the Kumo cloud, and now price action is once again below the trend line. So far, the market's setting itself up on the weekly for a crash alert sell signal going into next week if something doesn't change this week. Again, I'm showing you what's happening, and I'm showing you the big picture. Tomorrow's FOMC. It's going to affect the markets wildly. We'll get into more of that in just a moment. Next, I want to show you this bond picture. This is the TLT, the bond ETF. What do you notice? You notice that you're in a bear market. You're in the red zone. You're below the trend line. You're below the Kumo cloud. Trend line is also below the Kumo cloud. You are in an established downtrend. Markets trying to get a little something going, trying to search for a bottom, trying to build a base to rally from. And it's just been having a hard time doing it. The last buy signal on the daily chart came on January the 19th. We got this correction. Now the market has come back down to fill this gap that you made on the way up. And the bears are looking to possibly pile on. Now, the lower these bond prices go, the higher yields have a place to run. They don't have a choice but to go up. Even if they don't want to, yields go up. Rates go up. Interest rates go up when bond prices fall. All right. Technically speaking, the way this bond market has fallen from the mid 150s all the way down to 139, 138 actually, you would think that the interest rates would have rose maybe, a full basis point. But nope, it's been artificially kept at zero. And you can't keep that up forever. Tomorrow could be the big surprise. Now, let's get into the meat and potatoes of tonight's video. I wanted you to see exactly where we are. And I'm going to show you the Russell. As you can see here, we have a bearish pointer. Now, we came into today with a rally alert buy signal. All right, showing a major turning point. We were bearish for a long time, and now the market is trying to go bullish. But today, the market sold off. Now, yesterday we rallied into the close. Today, you fell off and then bounced about 50% off of the lows of the session. This bar did not really test or take out this bar, okay? Therefore, the market can still come down and take out this bearish pointer as early as tomorrow. Now, let me explain to you the secret behind today's market sell-off. For those that have been with me for some time on this channel, you've heard me explain to you the good old days of the markets going all the way back to probably before some of you were even born. Back in early 2000, we had a situation where the Fed made some very bold moves. They lowered interest rates in between meetings without warning. When they did this, it caused the markets to react violently. The Dow would fall 600-700 points in an instant. All right. Within 2 minutes, the Dow would be down 600-700 points. Simultaneously, the S&P 500 would drop to 105 points down. The NASDAQ would normally follow the Dow, and it would be down also about 600. Okay? This was typical during FOMC days. Sometimes the market would start moving like moments before the report will come out. Okay? Other times you would have what is called a delayed reaction. But today, there is a secret that happened. Today, for the first time ever, we had a reaction before, a day before the announcement. Normally, these point moves, the market moved in the exact same points that it would normally move back in the historical days of early 2000. But this time we did it 24 hours in advance. This is unheard of. This has never happened before. Normally, you'll get the exact point move we saw today. That 105 points down you saw in the S&P, in the E-mini S&P futures, that would happen the moment after the announcement, or it would be a delayed reaction, and it will happen, hours after the initial reaction. Sometimes even maybe the day after. Okay, but typically it would happen as the announcement was being made. Never before have we had a move to that extreme, to that exact point level, that point move we got. That would normally happen during the announcement or shortly thereafter, not a full day before. It is as if someone got the report early, a day early, and started making moves. Let me explain to you what those moves are. If you've been with me for some time, you've heard me explain to you the evolution, the evolutionary process of making a bubble. Okay. The way it works is there's a market that they are wanting to bubble, they got to first pop it first. If there's a market that they want to bubble, they have to do it because they want to allow themselves to get in on the ground floor. All right. And vice versa. Okay. If there's a market that they're looking to pop, they got to let it get to a certain height of level first before they bust it so that all of their guys can get out at the top. All right. That's what you saw today. Today you saw a huge stop run to clear out all the weak hands to get ready for the announcement tomorrow. That's why you saw the market rally violently going into the close. Now, the next thing you have to be concerned about is, what does this mean for the information? What is the Fed going to do and or say? I believe that the Fed is going to do absolutely nothing. The reason being is because they know that if they raise rates, it is going to decimate the economy that's already on life support. It can't withstand these rates being increased. Now, they may be foolish and raise the rate a quarter of a basis point. They may do that, raise it 0.25, just to test the water to see if people are serious about dumping stocks and taking profit if the Fed shows that they're going to be sticking to the plan of raising rates 4 times this year. That would equal a full basis points, by the way. They're not talking about points in the mainstream media. They're just talking about, well, the Fed, people believe the Fed could raise rates as much as 4 times this year. No, what you should be saying is they believe that the Fed could raise rates a full point. A full point. They don't want to say that because they would take interest rates from 0 to 1%. They don't want to talk about that. They want to talk to you in quarters, because typically when the Fed does do something, they do it by a quarter of a basis point. There were times historically where they were super aggressive and did a half a basis point, but mostly if they do anything, it's a quarter point. Either they lower the rate by a quarter point or they raise it by a quarter point. I do believe that they know they cannot be too aggressive if they do decide to do something, because it'll be taken as a sign of weakness and everyone will just exit left. So they know they can't do a half a basis point. If they do, that means they're insane and they actually want to see total economic destruction. They know better. They're not going to do that. They're not ready for total economic Armageddon. So they know they can't raise those rates. They could talk about raising the rates, but they can't really do it. So there you have it. If they do something ignorant and go a half a basis point, you have not seen the bottom in the equity market at this point in time. All right, just know that. If they do a quarter of a basis point, I think if they do nothing up to a quarter basis point, the market will continue its dead cat bounce rally off of the lows, okay? But we have a problem, and I need to caution you as to the problem. And this is part of the big secret. The big secret is we put in back-to-back pointers, ladies and gentlemen. These are back-to-back bearish pointers. Bearish pointers are always tested and or taken out at some point. So you know where we're going from here. It's a long way down from where the market is now. And I mean a long way down. Okay? That's just the Russell I showed you. But what about the tech sector? Or should we call it the REC sector? Here's what happened with the REC sector. This is a massive bearish pointer. And it ended the day without really putting in a bearish pointer. Not really. It was just a regular bar. But this right here is a massive bearish pointer. And yeah, this is going to get tested or taken out. You figure the low on this bar today was 14,014. Yesterday was 13,706. That means you're looking, ladies and gentlemen, for a potential 300 to 400 point drop minimum, which could come as early as tomorrow in your REC sector, which is your tech sector, your NASDAQ 100 futures. FYI, bearish pointers get taken out at some point. All right, I've shown you multiple occasions where that has taken to effect, and that's what you're seeing now. Flipping to the weekly chart of this NASDAQ, as you can see, we're now below the trend line, which means we are starting officially on the weekly chart. We are at the beginning stages of a possible bear market. We're in the red zone. We're in the red zone. This is a crossing of the Rubicon. The market still has a chance to come back because we've done this before. Let me just pull back. It's been a long time, but we've done it before. Okay, back here. You put in that bearish point to the first bar. Second day came down, took it out, like I said. But then a third day came down and then took that one out and made another bearish pointer at 6,628 3/4. And that was the week of March the 27th of 2020. We have not been back down there to test and or take out that bearish pointer from 6,000, and here we are at 14,000. Do you have any idea the cataclysm that could be potentially waiting this market? I'm just saying. You need to be prepared for this, ladies and gentlemen. You are officially in corrective territory now. The market is in a full-blown correction. The top is in for now. The top is in the stock market for now. Flipping over the Bitcoin. Bitcoin also put in a bearish pointer so far on the day. All right, on the daily chart. And it is in a very bear market. Very mature bear market. Way below Kumo Cloud, way below trend line. It is pulled away drastically, which means that we have not yet seen the bottom in your Bitcoin either. I warned you about this way back up here. Remember, way back up here? When we're at 67,000, I said you need to start popping your way through this and taking profit. If you don't, you're going to look real dumb. Well, those that didn't listen are looking real dumb. You have lost over 30,000 points. That is ridiculous. If the Dow fell 30,000 points, there would be tanks rolling down the street and nuclear bombs going off somewhere in the world. But this is what's happening in your Bitcoin. The bear market is extremely mature, and it's having its way. every sell signal is giving you mad downside production. Mad downside production. Every one of those sell signals within this bear market are paying dividends. Something to think about as we move forward, ladies and gentlemen. It's not a game. It's not a joke. This stuff is for reals. All right. Markets are telling you something. They're showing you something. They're trying to tell you. They're trying to warn you. Trying to give you a heads up as to what's going down, so that you can make well-informed decisions about your trading, about your investing, about your portfolios. The L folio. Okay. With that being said, that's all I got for you, man. Tomorrow's a big day. FOMC. Will the Fed be smart and do nothing? The best move they could make is to do nothing. A bad move would be to raise rates a quarter of a basis point. A stupid move would be a half a basis point or greater. All right. Now you have the marching orders for tomorrow. You have the what to look for tomorrow. All right. It's going to be interesting. All right, y'all know what to do. Smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.